Hi there, very good morning. The top business stories now from Sky News Live in the city. Oil prices fall as Israel delays its ground invasion of Gaza. Retail bosses meet policing leaders at Downing Street to discuss how to tackle the surge in shoplifting. Plus, the UK housebuilder Vistry is to cut 200 jobs after a slump in demand. Hi there, very good morning. You're watching Business Live with me, Emma Crosby, sitting in for Ian King this week. Now, the price of oil has slumped this morning as Israel delays its ground invasion of Gaza. Brent Crude fell to just over $91 a barrel earlier. That is down more than $1. Prices have risen by 8% since the Hamas attacks on the 7th of October amid fears of a wider conflict in the Middle East. Well, I'll have a look at the current oil price for you now. A barrel of Brent crude will cost you $91.81. Let's get the very latest now. Olivia Gallarati, who is an oil markets analyst at Energy Aspects, joins us now. Olivia, welcome to the programme. Thank you for joining us. And no doubt you are keenly watching events in the Middle East as they unfold, as we are here on Sky News. I mean, how much do you believe the dip in the oil price overnight is due to a possible delay in an Israeli ground invasion in Gaza?
Thank you for having me. I would say, of course, oil prices are going to be very reactive to any headline at the moment that's related to the geopolitical tensions in the Middle East. There's no doubt about that. Although I would highlight that probably the most important thing at the moment is that there have been no tangible impacts on oil supply so far, which means that rather than pushing prices higher or pushing them lower, anything that's related to an escalation of the conflict so far will be keeping a floor under prices at the moment.
And yet we've seen since the 7th of October, of course, there were the attacks when Hamas attacked Israel, a lot of volatility in the oil price. We call it the risk premium, don't we? So as an oil analyst, I mean, what do you make of these fluctuations and what kind of scenarios are you and your colleagues modelling for the future?
Yeah, so we actually don't think there is a significant risk premium embedded in the oil price at the moment, because, as I said, the market hasn't seen any impact on oil supply at the moment. There's obviously been a lot of geopolitical tension, and the market is very aware that any further escalation of the conflict and the impact on supply cannot be ruled out at the moment, but we have not seen that yet. For sure, there has been significant volatility in how Brent oil prices have traded over the past couple of weeks, but we're actually a little bit lower today than where we were, say, at the beginning of October. So it hasn't led to higher oil prices, what we've seen happening in Israel so far.
And if the region escalates, which we all hope that doesn't happen, but if that does happen, then what?
We don't think that's an inevitable situation, but it definitely cannot be ruled out, a possible escalation of the conflict. If that were to happen, the reaction of oil prices would be significant. And here we're not talking about, a couple of dollars, but it would be much more than that. So is there a possibility for oil prices to move higher? Absolutely. But at the moment, we're not seeing any significant indication from the market and from the situation on the ground that will be the case for sure.
In all these situations, there's always a bit of speculation, and certainly was a lot of speculation over the weekend that oil could tip $100 a barrel. Would you expect that?
That is a possibility, and I would say there are probably other fundamentals factors related to the overall supply and demand situation currently in the market that could lead to that, regardless of the sort of geopolitical situation in the Middle East. If you're looking at oil inventories globally, we are at very low levels. In some parts of the world, like the US, for example, we're looking at tank bottoms in certain regions. For example, at Cushing, which is one of the main oil hubs in the United States and probably one of the most watched statistics in terms of oil market inventories. So we are very low, and if on top of that you add any potential supply disruptions, of course, there is a possibility for oil prices to move towards that $100 mark.
And if that happens, Livia, what impact will that have on the global economy? Because we all know that oil is so fundamentally important to the global economy in terms of being an inflationary a factor, but also a factor for economic growth as well. So at a time of high inflation and high interest rates, what would $100 a barrel do?
Well, as you said, of course, higher oil prices are inflationary, so that is something to watch for, and that economists are very, very much aware of. I would say at current prices, where we're at today, for example, if you adjust for inflation levels, we're not that high. If you take, for example, 2015 levels, we're probably around $70 per barrel currently, which is not. It's not a particularly high oil price that would lead us to have any concern in terms of demand destruction, because that's ultimately what it comes down to. So we're probably quite a way away from that still.
And Livia, you've mentioned supply a few times in our chat already. I mean, what would you hope to see from the likes of OPEC, the big oil cartel, in terms of production supply, if we were to hit those $100 a barrel marks?
Well, for now, there is no indication from OPEC that they are planning to roll back any of their current supply cuts that they have put in place until the end of this year. They are going to look at those targets in the next couple of months again and see what they can bring back for the new year. And of course, if you start getting much higher oil prices than where we are right now, with potentially disrupted supply from other parts of the Middle East in relation to the conflict, which again, we're not seeing right now, but that is potentially something that could happen, then yes, we think OPEC could be looking at rolling back some of those cuts. But yeah, it's a moving target. It's a very volatile situation. So we're just going to have to wait and see for now.
Wait and watch as with the rest of us. Livia, thank you very much. Olivia Gallarati joining us there from East London.
Thank you.
Now, we've reported a lot on this programme recently about the surge in shoplifting here in the UK, with chief executives of some of the biggest retailers warning of a growing crisis. Well, in an hour's time, the policing minister, Chris Philp, is hosting a roundtable at number 10 Downing Street with retail bosses and senior policing figures. They're expected to unveil a joint plan of action to try to tackle the problem. Well, joining me now is Chris Noice from the Association of Convenience Stores. Chris, good to have you on the programme this morning. I know that you are not necessarily a voice at the round table, but you are very much involved in this discussion. I think you've got, 33,000 stores that you represent up and down the country. So what are your members telling you about the crisis of shoplifting in the UK right now?
Good morning, Emma. Yeah, well, some of our members will be in the room today, some of our larger members as part of that group. But whether we've got the biggest members or the smallest members that are just running one store, the situation is very bleak when it comes to shoplifting right now. We've got record levels of theft and record low levels of reporting. And we saw over the weekend that the official figures had risen by a quarter in terms of the number of incidents that have been reported. But that's still just a fraction of what's actually happening on the ground, because there remains, unfortunately, still real frustration from retailers about the response from the police and getting these prolific offenders off the streets.
I mean, can you put a cost on what's happening? And it's not just a financial cost, is it? I mean, shoplifting is a horrible thing to experience if you're a shop owner, and there's also potential of violence and verbal abuse.
Yeah, absolutely right. I mean, the financial cost solely is about 6 or 7 pence for every transaction that happens in a convenience store, additional based on the crime that store experiences, and that's all across the UK. But you're absolutely right. Beyond the financial cost, it takes a huge toll on the businesses that are experiencing this. And you remember, most of the businesses that run in convenience stores, they're small businesses. They're in some cases family businesses, and it's making it more difficult to make ends meet. In some cases, the sheer levels of theft will mean that business, instead of turning a profit, actually makes a loss that year. And for some, you mentioned violence and abuse there. We know that theft is one of the biggest triggers of abuse in store as well, when people get challenged, and that can have a life-changing impact on the retailers and their colleagues in stores that are dealing with this on in some cases a daily basis.
What's driving it, do you think?
Well, there are a couple of things that are the primary drivers for the huge levels of shop theft we're seeing recently. Number one is the organised groups that are doing this. They're stealing to order. They're stealing to then sell on to people that might be more willing to take a risk on those high value products. So things like coffee, meat, cheese, alcohol, those kind of products that people might not want to spend £7 on a jar of coffee, but they might spend £3 or £4 on Facebook or down the pub or whatever it is, and to get that product from a slightly less legitimate route. But then also there's a huge issue with addiction and people funding drug or alcohol addictions. And it's not just legitimate products that are getting more expensive in the cost of living crisis. Drugs are as well, and alcohol is as well. So they have to find ways to fund those addictions. What we're not seeing is people that are otherwise good people suddenly going bad and stealing. That's certainly not happening. But there's a quite sinister group of organised criminals that are taking advantage of people during this cost of living crisis.
To tackle it, the government say they will use new legislation, the Crime and Justice Bill, to force judges to impose jail terms when you have repeat offenders. And the Labour Party say that if they get into power, they pledge to investigate all shoplifting cases, no matter the size. Do you have a preference?
Well, I think certainly investigating every incident has to be paramount, because what we see is these are repeat offenders, these are prolific offenders. And when incidents that seem small don't get investigated, they don't get linked up, and then you don't see the full picture of what one or two people might be doing in an area in terms of the number of offences they're committing. When we talk about the right sanctions, the right interventions, for some people that may be prison time for those offenders. For some people it may be rehabilitation. For some people it may be something in the margins of that. There isn't a one-size-fits-all approach to this, but I think we are moving in the right direction in terms of police and crime commissioners, local forces, the government, as we're talking about this meeting today, taking shop theft seriously and really realising the full impact that it has on convenience stores and other retailers as well.
When it comes to policing, though, is it practical for every case to be investigated by the police, given that it's happening up and down the country in the hundreds every day?
Well, it's important to make the distinction between investigated and attended. We're not necessarily expecting the police to attend every incident of theft, because there's probably one happening every 6 or 7 seconds around the UK. It's not practical to do that. But when I say investigating, what I mean is that retailers have the opportunity to present evidence to the police, whether it be through CCTV or even local intelligence. And we're seeing more and more now that the police are getting a lot smarter in the ways that they're bringing that evidence together. So whether it be through AI, facial recognition, all these kinds of things that are becoming more and more available, drastically cut down the manual time that the police are taking to investigate incidents. So, yeah, I think it is realistic that the police should investigate every crime that takes place, because otherwise it's not a crime, right? It has to be sanctioned properly, and people shouldn't feel as though this is a victimless crime that they can get away with.
Indeed. So what are your hopes then, Chris, for today's meeting? Rather than being more than just a stunt, what do you want? What tangible conclusions do you want to see coming out of today?
Well, one of the big areas that we look at is the priorities of police and crime commissioners, and these are the people that set the priorities for their local forces. We want to see every police and crime commissioner across England and Wales committed to investigating shop theft, in looking at things like most wanted lists for prolific offenders, and really tackling this issue at heart at a local level. And I think ultimately what this means is eventually we're going to need more resource for the police, for the justice system to be able to deal with shop theft. Because I was talking to a retailer the other day who'd done some media on this. He'd had some crews in his store talking about the theft he experienced. And he had the inspector come in and say, well, we're coming in to look at your store now. That doesn't mean we have more resource. It just means we're not attending something else. So ultimately, it will require more resource and more joined up thinking from the police, the government and the justice system.
We'll leave it there. Chris, thank you very much. Chris Noice from the Association of Convenience Stores. Let's have a look at some other stories now for you. The UK housebuilder Vistry is to cut 200 jobs and make £40 million less in profit than previously thought after a slump in demand. In a trading update, it said that high interest rates and the cost of living pressures had resulted in a slowdown in property purchases. Now, despite reiterating profit expectations of £450 million last month, the trading update revised this sum downwards by £410 million in adjusted profit before tax for this year. The Swiss pharmaceutical company Roche says it's going to buy Telavant as a developer of a new treatment for inflammatory bowel disease for an initial $7.1 billion from the US biotech firm Roivant Holdings and Pfizer. Under the deal, Roche will gain the right to develop, manufacture and commercialise an experimental drug known as RVT-3101 in the United States and Japan. It's the first big acquisition since the new chief executive took charge in March of this year. And shares in the drug maker Indivior rose by 7% in early trading after agreeing to pay $385 million to settle lawsuits brought by drug wholesalers over claims that it illegally suppressed generic competition for its opioid addiction treatment, Suboxone. The company said the agreement would mark the end of the litigation relating to Suboxone once it gets court approval. Still to come here on Business Live this morning, we're going to take a look at how the markets are doing today. Do stay with us.
So what scientists have shown is that a new drug for prostate cancer could be on the horizon. Specifically, what they did was an early-stage clinical trial. They recruited men with prostate cancer whose tumours were no longer responding to treatment. And they found that combining this new drug with a current treatment, in 1 in 4 of them actually was able to either stop the growth of the tumour, in some cases shrink it. So it's incredibly promising. And I think what I find really exciting about it is it really just exemplifies the power of discovery research. It was about a decade ago when scientists in the lab uncovered this new potential way that we could target prostate cancer. And today, we're really seeing the impact of that. It involves our immune system, which is, everything we use to fight diseases, including cancer. And what the drug does is, so prostate cancer can be very clever, and essentially it can co-opt immune cells and hijack them in order to promote its growth, promote its survival. And what this drug does is it stops that. It allows us to take back control of the immune cells and then makes the prostate cancer unable to resist treatment. So that's kind of how the drug works. And in terms of what this means, at the moment, this is a really early stage clinical trial. And what we now need is bigger clinical trials in order to show that this drug is effective for people with prostate cancer. And actually, it isn't just for people with prostate cancer. These specific immune cells that are hijacked by tumours is also being seen in other diseases. So actually, Cancer Research UK are supporting scientists in Newcastle to look at if this drug could be effective in liver cancer. Oh, wow. And I think we might see, that it can have a broad effect on a number of cancers.
The 5 of us have made it out of the car.
Welcome to Backstage, the film and TV podcast.
It's like Emirates. It's like better. Fly Emirates. Fly better. Thank you.
Hello there, welcome back to Business Live. Let's have a look at how the global markets are trading this Monday morning. Given oil has seen some big moves overnight, let's start by checking in on the oil price. A barrel of Brent Crude is currently trading down, as you can see, nearly 0.5% to 91.72. That's after last week's strong gains. As we heard earlier, events in the Middle East very much affecting the oil price volatility, as you would imagine. Onto the stock markets now. Let's start with Asia. That's where the trading week really begins. Markets have started lower, as you can see. It's red across the board there. Weakness in the Chinese markets and concerns about rising geopolitical tensions have certainly dented sentiment. On to Europe as well now. Halfway through the trading day, markets are, well, they were steady, but you can see they're trading to the downside now. It's a big week this week in terms of earnings front. Some big companies reporting this week. We've also got a meeting from the European Central Bank, potentially about interest rates. And let's hone in on London now. The FTSE 100 is also trading to the downside today, down over 0.5%. Commodity-linked stocks are keeping equity markets under pressure here. That's, of course, with the oil price falling. And a big week ahead here as well. The likes of Barclays posting their results tomorrow. Quick check-in with the currency markets as well. The FX markets watching the dollar once again. It's been a safe haven trade of late, particularly last week. You can see the pound is looking weaker against the US dollar and against the euro. And in terms of the euro-dollar trade, the euro is still showing a bit of strength there, up pretty flat, but slightly, I should say, to the upside. Expert view for you now. We're joined by market commentator Rachel Winter, who is a partner at Killick & Co. Rachel, welcome to the programme. Let's hone in on some individual stocks, why not? I know house builders have certainly got your attention today. Vistry coming out with a poor set of numbers, really, and a poor forecast for future. What do you make of that?
Yeah, it is a bit disappointing. I think the profits are about 10% behind expectations. But this is really what we're seeing from all the house builders at the moment. I mean, last week we had results from Bellway and from Barratt. Both of those reported sales that were down about 30% in comparison to the previous year. So I think it's a very difficult time for all house builders at the moment. Demand has really gone down because interest rates are so much higher. But the good news for Vistry is that they are slightly pivoting the business away from private sales towards focusing on affordable homes in conjunction with local authorities. And while that type of business might be a bit less profitable, it does tend to be a bit more resilient. So having that sort of balance might be a good thing as we move towards a more difficult economic time.
I know that lack of supply is a big issue for home builders, but so too is affordability. I mean, economically, it's not the greatest time to start buying a house right now, is it? So we've got the Chancellor's autumn statement to come up later on this month. What would you hope to expect, or what would you think house builders would like to hear from him if he has anything good to say to them?
Well, we've had some speculation over the weekend that this mortgage guarantee product for first-time buyers will be extended. And how this works is the government will support banks and encourage them to offer 95% mortgages to first-time buyers. So effectively, the government will guarantee a part of the mortgage. I think this is perhaps good news for first-time buyers who don't have much of a deposit, but do have higher earnings and are able to cover a higher monthly payment because interest rates are quite high. But for many first-time buyers, I think both the deposit and the higher monthly payments are a problem. So this scheme is not going to help with both of those things. And if we have a look at markets this morning, we can see that house building shares are down and banks are also down as well. So I think that shows that the extension of this scheme is not going to make a huge amount of difference.
Talking about things that are down, I mean, it's a sea of red out there at the moment. It's very volatile, it's very tough, and it's no surprise, is it, with geopolitical tensions and the focus very much on the Middle East. You've been looking at the VIX index. Now, for our viewers who don't know what that is, just very briefly tell us what it is and why it's important.
So this is also known as the fear index, and it's a way of measuring the expected future volatility of the S&P 500 index. So if you're a trader and you expect a big increase or a big decrease in the index, you can take out an options contract to either profit from that or to protect yourself from it. So we can have a look at how these options are being traded to get an idea of how people think the market is going to move. And that's how the VIX index is calculated. Now, if the VIX moves above a level of about 20, that is thought to indicate a high level of expected volatility. So if we go back to mid-September, the VIX was trading around about the level of 13, and today it's closer to 23. So there's been a very notable increase, and that does definitely show that people are feeling more scared than they were last month.
Pockets of interest in the news in stocks, I should say. Roche coming out with some interesting headlines. What do you make of that?
I think it's a positive. So Roche has really struggled with its drugs pipeline recently, and it has been very open about the fact that it would be willing to buy other companies with promising drugs. So this morning it has announced it's buying this company called Televant, which is making a product for inflammatory bowel disease. Now that affects about 8 million people around the world, so it's thought to be quite an attractive area to be involved with. But we haven't seen much of a movement in the Roche share price this morning, so I think they will need to do a bit more in terms of developing new drugs in order to push their share price higher.
We need to leave it there, Rachel. We appreciate your time. Thank you so much for joining us, the Market Report there. And just to let you know, that's it from me. We'll be back with another edition of Business Live at 4:30 tonight, 4:30 this afternoon. Look forward to seeing you then. Bye for now.